Welcome folks, how are you all? I hope everyone is okay. So in this video, I am going to show you a step-by-step process so that you can understand how to trade in a specific day. Just keep that in your mind. This whole price action is only applicable for Monday. First, you have to think about the narrative. By the way guys, before going to this video, I would love to tell you something, and that is one of my brother from my last video, he told me to start from a clean chart. So here I'm going to start today's video from a clean chart. Okay, nothing is annotated over there except this line. That line is actually I have marked the 9:30. So before 9:30 you have nothing to do. So don't focus after price action, after 9:30 price action. You don't know what happened after that line. So you are going to predict that price action, and how to predict that is my intention to show you how to predict the price action. Now if you see from 15 minutes chart, this is from 15 minutes chart. First you have to look for the liquidity before 9:30. What do you see? Do you have any buy side liquidity? No, you don't have any buy side liquidity. This run came here. I will explain why it reached until that area, but first what you have to do, you have to look for the liquidity. Where is your liquidity? When market reach over there, it doesn't make any buy side liquidity. Instead of that, if you see this low and that low, they are relatively equal lows. Here this low and that low, they are relatively equal lows. That is my sell side liquidity. So from 15-minute chart, I have very clean sell side liquidity only, so I'm bearish. Now don't think this is actually okay, what to say, I mean hindsight. Just look at the bottom left corner. I have tweeted that beforehand to my Twitter, so all of my viewers or followers, they know that today's market going to take that sell side liquidity level. Okay, that 18616.75. So that was my target for the morning session. Now you have this sell side liquidity, you don't have any buy side liquidity. Now when you don't have any buy side liquidity, are you going to frame, I mean are you going to think that market is going higher? No, you are not going to think like that way. So you will let go every buy setup. You will let every buy setup go. Instead of that, you will only look for the sell setup. Okay, you have the opportunity to take sell only, no buys for you. Today is Monday, and Monday is actually the accumulation day, so market will be in range bound. This is expansion. You don't know that market is going to expand like that way. Okay, so you have the information until here. You don't know what is going to happen next, but first you have to expect that today is Monday, so market will be range bound. So something like this should be the price action from Monday. Now when market reach until that area from what is I mean before 9:30, look on your before. What do you have? This is the leg. This high has traded this leg, but this leg is very messy. If I see this type of messy price action, I actually go to hourly chart and I try to find out some level around that area from hourly chart. Now if you see, this is that hourly leg where market has traded around that area. Okay, it has traded that hourly leg. What happened over here? See, this high, this swing high has traded this parallel gap. This is the parallel gap which has been traded by that high. This is the highest up close body close candle. What is that called? Order block. Do you know what is order block? If you don't know, please watch my video. I have uploaded to my in my channel, how to mark the order block. Okay, so this is the change in state of delivery or the order block. Market reached until that order block, then market started to fall. Now we'll go back again from 15 to your 15-minute chart. So around 9:30, market reached until that order block. So are you, what should you think? Now market should fall where? Toward this sell side liquidity. So this is your line. At the same time, you will think from 15-minute chart, because this is the bellwether for most of the ICT traders. From the 15-minute chart, you will be easily understand what and how you should trade and where you should look for. Okay, I mean what should be your target. I have this clean sell side liquidity. I don't have any buy side liquidity. I have seen that market has reached until that order block. I will go to 1-minute chart now. So now I'm in 1-minute chart, and from 1-minute chart, first I will see you again. Okay, you don't know what is going to happen after 9:30. So around I mean before 9:30, what do you see from 1-minute chart? Market reached until that area. What it has done? it has taken this relatively equal highs. Okay, this is the relatively equal highs. I'm going to mark them. So this is my relatively equal highs, and I'm gonna mark them as a buy side liquidity. I will show you why that is important. Just give me a little more time. At the same time, look over here. Above the 15-minute sell side liquidity, you have this 1-minute buy sell side liquidity. So this low, let me mark it by this line. This low, that low, they are relatively equal lows. Then this low, very clean lows. Market doesn't like to keep this type of clean lows or clean highs. Okay, then I will extend it to my right and I will mark it as my sell side liquidity from 1-minute chart. Now, why I have marked 1-minute sell side liquidity? The reason is I have this extreme liquidity from 15-minute chart. I'm not going to hold my trade until this 15-minute liquidity. Instead of that, I will look for 1-minute liquidity. So you have to look for 1-minute liquidity as your target. You are not going to hold your trade until that 15-minute liquidity. Can you do that? Absolutely, you can do that. But in that type of situation, you have to take a partial around that area and you have to put your stop loss to the break even. Then the rest contract, you will let them go if it can take that 15-minute extreme liquidity or not. Okay. So now look over here. After 9:30, we are not going to trade. Why? Because we had a news around 10 PMI news. So if you have a news, red folder news, you are not allowed to take entry before that news. So you have to wait at least until 10 a.m. So you are good to go around 10:01. You are good to go. But before 10:01, you are not allowed to take the entry. Okay, because the news volatility is extremely dangerous. You should not go for that. Now I'm coming here. Don't focus at this price action. I don't know this is going to happen. I don't just know. This candle is 10 a.m. This is that 10 a.m. candle. So this is the news candle. Before news, what happened? Market went higher. Take this buy side liquidity, reached until that order block level, then market fall. Okay, before that news. Now when market fall, I got my market structure shift here. This is the only swing low which is valid for shifting market structure. I got this market structure shift. Why market is so volatile around that area? Because we had a red folder news, PMI news around 10. So this was the reason market was too much volatile. I'm going to remove this line now because this is 9:30 line. So it will be easier to see the clean chart. Okay. Here you have this market structure shift. Where is your entry fair value gap? This is your entry fair value gap. Okay. Here. This is your entry fair value gap. Where is your breakaway gap? This is your breakaway gap. There is your breakaway gap. I'm going to mark it as a breakaway gap. But brother, there is another fair value gap over here. Why you are not marking this? My same brother asked me this question. Why sometimes I mark this one and sometimes I just don't give that much attention to this fair value gap. The reason is you can see this is that buy side liquidity level, relatively equal highs. So this fair value gap situated at the level of this liquidity. If I see this type of situation, I don't pay that much attention to that fair value gap. Instead of that, I actually, I mark the lower fair value gap as a breakaway gap and this one as my entry fair value gap. So I just skip this one. I don't think so there is any fair value gap. Can market reach until that area? Very rare. Very rare market reach until that area. Now around here, you are not allowed to take your entry over there. The reason is, though market has taken this buy side liquidity, perfect market structure shift, this is our well-known setup. This is your 1-minute sell side liquidity, and you can see, and this is your extreme liquidity from 15-minute chart. Still, you are not allowed to take that entry. The reason is 10 a.m. news. So market went higher. This is that news candle. After this candle, you are good to go. The very next candle, where did it close? Below this candle. See, below this candle, it closed below that candle. What is that called? That is called my order block. So I am going to mark this order block over here, and that area, this is my order block. As I am bearish. Why I am bearish? Because I have only sell side liquidity. That is your first step. If you are a beginner to ICT concept, that should be your first step, to look for the liquidity from 15-minute chart. This is how you will be easily, you can mark the, you can go with for the daily bias. Okay. So my bias is bearish because market should take that sell side liquidity. I'm bearish. Here is the setup. Market has taken the buy side liquidity, market structure shift, fair value gap. Market trade that fair value gap, it should fall now. Now, you are not allowed to take that entry because of that news. So I'm not gonna take my entry depending on that. Instead of that, what I'm going to do, I'm just gonna mark the order block over here, and I would love to take my entry from that order block. So the very next candle, it tapped to this order block over here. So I will take my entry over there, and maybe I will put my stop loss above this constant enforcement of this entry fair value gap. Okay, just put it over there for your safety. After taking this entry, where should be your target? This extreme liquidity? No. Look, this sell side liquidity from 1 minute chart. Remember, this low, that low, that low. Very clean lows. They are very, very, very clean lows. What happened? Market came back again until this liquidity, see, but failed to take that liquidity. What is that called? Strongest liquidity. Relatively equal lows. Market came one more time to take that liquidity, failed to take that liquidity. That is called our strongest liquidity. So this liquidity should be your target over there. That should be your sorry, just let me put it over there. That should be your target. So here, that is your entry. Brother, the risk to reward ratio is not so good. 1:1.44. I can see it. I can simply tell you that, brother, put your stop loss over here. Just put your stop loss over there. Now, how much is your risk to reward ratio? 1:2.65. But this is not logical. You have to put your stop loss above this constant enforcement. The best is to put your stop loss above the mean threshold. Now, let me mark the mean threshold of the order block. The 50% of the order block is called the mean threshold. Okay, so just let me mark it here. This is the order block candle, and I'm going to mark the mean threshold of that order block. So here, this is your mean threshold and that area. Okay, to that order block. Now, look what price has done. Reach until where? Until that mean threshold. Is there anybody that has closed above that mean threshold? There is nobody which has closed above that mean threshold. How beautifully this order block hold the price, see? Then fall for the sell side liquidity. You don't need to do that. All you should care about how many handles you are going to get. 31 handle. Even if you take one contract entry, that is going to be near about $600. Okay, just $600. So you don't need to take that much risk. Instead of that, you can just put your stop loss above that constant enforcement. You should believe that market has traded the constant enforcement around the news time, traded this breakaway gap already. It should keep falling. So even if it is extremely high, jealous, it can reach until the low of this entry fair value gap because it has been traded from high and from the constant enforcement. Now it should reach until that low of that fair value gap. Look over here, one time, two time. What did it reach? To the low of this fair value gap. But for the more safety, you should put your stop loss over there, and that should be your target. That 1 minute sell side liquidity, that should be your target. So this is your first opportunity to take sell. What happened after that? After taking this sell side liquidity, what is this called? This is called the liquidity has taken around that area. Sorry, the liquidity has taken that area. But how did it take that liquidity? By a shallow run. If I see the shallow run, I actually mark the low of that shallow run as my next liquidity, or which is called the obvious liquidity. Now I have this obvious liquidity from 1 minute chart. Still I have this 15 minute sell side liquidity over there that is untagged. Okay, untagged, still untagged. After trading this order block, market fall, take that liquidity from 1 minute chart, then market started to go higher. Look how beautifully it has given you another market structure shift toward the buy side. Okay, market is now going for the buy side liquidity. Oh man, bullshit. Why you should look for that buy? You should not look for the buy. Why? The reason is you don't have any liquidity for, you don't have any buy side liquidity. Until this sell side liquidity is not taken, you should not look for the buy side liquidity or buy setup. Another friend from my Twitter, he asked me, brother, how do I know which one is market structure shift and which one is actually the liquidity taken? It depends on your liquidity from 15 minute chart. From my 15 minute chart, I have the sell side liquidity. So when market is going higher, I will see this as a liquidity taken, not market structure shift. Instead of that, I will wait for the lower market structure shift. Okay. So when market is going higher, I will let everything go and then I will wait for the sell setup. Now come to this part. What happened? This whole price action went until this mean threshold. It has taken this buy side liquidity, and then it has taken this buy side liquidity as well. I mean, this high has been taken over there, and that area it has taken this high as well. After taking the high, market fall. This swing low is valid for shifting market structure. Why it is valid for shifting market structure? Because this low has traded that fair value gap. I'm going to mark this one as my market structure shift. Here, this is my market structure shift. Another market structure shift. And where is my fair value gap? Now, here is the part of our well-known setup again. This is the last fair value gap or the breakaway gap. I'm gonna mark it as a breakaway gap. And here is my entry fair value gap. Do you see any other fair value gap around that area? Any other fair value gap around that area? I don't see any other fair value gap around that area. So I have to take the entry over here. Just let me show you here. And my stop loss should cover this breakaway gap. Where should be my target? Here, this sell side liquidity, not this one. Now you can say, brother, this is just, I mean, this is not logical. Yeah, I agree. So let it go. You don't need to take entry over here. Instead of that, how can you take entry on that area? This type of situation created because of the PMI. Okay, we had a news, so this is highly volatile price action now. That is why the setup is going to be very, very, very big. Now, the real setup was there. Market structure shift, fair value gap trade, market trade the order block, fall. After falling, you see this fair value gap around that area. That should be unfilled. That is the fair value gap. That should be unfilled. Here is the part of the breaker block. I have already uploaded the breaker block video as well to my YouTube channel. If you are confused about the breaker block, please go and watch that breaker block video so that you can understand where and how you should look for the breaker block. This fair value gap should be unfilled and market should take that sell side liquidity, but market didn't do that. Instead of that, it has closed that fair value gap perfectly over here. See, this candle has closed this fair value gap perfectly. When this candle closed that fair value gap perfectly, I will start to look for high, low, higher high. The lowest down close body close candle is my breaker block. I'm going to mark this breaker block here. This is my breaker block now. Breaker block. Okay. So here, this is my breaker block now. Now look what happened. Market came back again, made this obvious liquidity as a relatively equal lows again, then go back again. Go through this entry fair value gap. Where did it tap? To the low of this breaker block. Can you see it? Just tick by tick. This is called precision. If you don't want to take your entry from that entry fair value gap, depending on that 22 YT model, no problem. Mark your breaker block. Tap to this breaker block. Take your entry over there. Around that area, take your entry. Cover the breaker block with some mohawk or something like that, and just mark the sell side liquidity around that area. Now it is 1:1.24. Okay, 1:1.24 risk to reward ratio. Brother, it is still not good. It's kind of 1:1. Yeah, I can simply told you that, brother, put your stop loss over there, and you can see that it is 1:1.5. That is not logical. So I'm not gonna teach you something illogical. Yeah, in this type of situation, if you see market is extremely volatile, I mean your stop loss is extremely high, you are not able to take that entry. In that type of situation, you can put your stop loss little below, cover the breaker block constant encroachment and the breakaway gap constant encroachment. Believe that market is not going to that breakaway gap anymore. Even if it reaches until that breakaway gap, it is going to trade the lower part of this breakaway gap or the constant encroachment of that breakaway gap. It is highly risky, but still, if you would really love to take that entry like this way, this is the only way you will be able to take that entry. There is another way to take that entry. Don't get panic. I will show you that as well. Okay. Now here is another part. You are not interested to take that breaker block entry as well because it is extremely high. What to say? The stop loss, yeah, or big stop loss. So I don't want to take that entry. Okay, no problem. Remember what happened over there? Market traded that fair value gap, went lower. This is that order block. You took the entry from that order block. Now here, see this two up close body close candle which has traded this entry fair value gap. Mark the low of this consecutive order block. Why this consecutive order block, brother? Just watch my order block video, you will understand. This is your order block. Okay, this candle closed below this low. The very next candle, take your entry over there, around that area. Where should be your stop loss? Your stop loss should be there above this consecutive order block. You have to put a stop loss over there. In this type of situation, you can mark this sell side liquidity as your target. Why? Because market is extremely near to this sell side liquidity, and you should believe that here for the first time market has taken the 1 minute sell side liquidity, then made the breaker block. So after taking the 1 minute liquidity, sometimes market reverse to make only for the breaker block, just for the breaker block. There is nothing, no other reason for market reverse then fall. So when market has already made the breaker block, trade the breaker block, then it is falling, it should go for the sell side liquidity, your extreme sell side liquidity for the last time. So this is your last chance to take that entry. And here, if you just see over there, and can you put little lower of that thing? Okay, just little lower of that liquidity level, just one handle or two handle lower. In this type of situation, you'll be able to catch that 1:2, which is going to be your 40 handle. Even if you take one contract only, that is going to be $800. Okay, now here I would love to show you something else. This is little different. In this, for understanding this one, you have to watch my last video which I have uploaded to my YouTube channel, which is called ICT Algorithmic Price Action. So if you have already watched that video, you will understand this part. Otherwise, you won't understand anything over here. Okay, now as you see, market reached until that area from this entry fair value gap, then market fall. This leg has taken liquidity. Remember, I just marked the low because it has taken the very strongest liquidity and made the shallow run. But this leg has taken this liquidity. So this is that entry fair. This is the first fair value gap, which should be reversed here. Okay, now I'm going to mark it around that area, and I'm going to remove this one because I need to explain this one. I'm going to remove this breaker block as well and the breaker gap. Here, this is that fair value gap. At the same time, trading this one, this is the first fair value gap as well. So you have to mark that first fair value gap as well. And you have to compare these two fair value gap, this fair value gap and that fair value gap. If market would love to go lower, it should not close above that constant and cosmet. Here is the part where you are able to take another entry depending on that inversion fair value gap. What is that entry? You have to take your entry when it will tap to this fair value gap low, this upper fair value gap low, and you should cover this fair value gap, the whole fair value gap. Okay, just one tick above this fair value gap, one tick above that fair value gap, because market should not close this fair value gap perfectly. Even if it close, it should not go not even one tick above that fair value gap, not even one tick. Okay, and body has to close to the constant and cosmet. Same thing, this sell side liquidity should be your target. That is your another precise entry, which is called 1:4 risk to reward ratio. As I told you, it's not for beginner. Whoever already watched my that video and studied that, this is going to be important for them. Otherwise, don't focus over here that much. Okay, please don't focus over there. It is extremely dangerous. You have to understand the whole price action, how it has taken this low or relatively equal lows. Then you have to mark this fair value gap and that fair value gap. Then you have to compare these two constant and cosmet, this one and that one. That means it can be broken, but that can't be broken. Most of the time, market will tap to this low or the constant and cosmet, then market fall. So these two fair value gap is extremely important. So you can use those as your entry setup. Now, guys, everything is done. Do you understand how to trade in a specific day? How to mark the liquidity, when you should look for entry, how many entries there will be if you would love to trade, how many entries, okay, how many opportunities you will get if you just be patient. Now I would love to show you something more deep. This part is not for beginners. So if you are a beginner, just close my close the video right now. But if you are with me for so long now, you know a little bit about the ICT, then you will understand this part. Otherwise, just close the video right now. Here I am in 30-second chart, and I'm just going to remove this one and that area. Okay, so let me show you this one. Yeah, perfect. Now here, and let me remove this too as well. Everything, I just don't need anything around that area. All I need is this sell side liquidity. So before here I had this sell side liquidity. If you remember, this was the sell side liquidity level around that area. This was the sell side liquidity level. Okay, so I'm going to mark this as my sell side liquidity. Later this sell side liquidity created, so I'm going to remove this one. Now this is 10 AM news candle. So this candle went higher. This run has taken relatively equal lows. See this low, that low, they are relatively equal lows, and this low as well. Just let me mark it, then it will be easier for you to see it. Over here, just look. This run has taken this liquidity. Remember from 1 minute chart, taken liquidity, I marked 2 fair value gap over there. I am going to show you the same thing over here. Here, this is the fair value gap, first fair value gap, mark that on, and this fair value gap, just mark that on as well here. Okay, this is the proof of my point what I have shown you in just 1 minute ago. Okay, I have just shown you this same setup, that fair value gap, this fair value gap. Where should be your entry? Your entry will be here when it will tap to this fair value gap. So that will be your entry around that upper fair value gap low. Okay, upper fair value gap low. Where should be your stop loss? Just 1 tick above this fair value gap, because market should not close or go above the constant crossment of that fair value gap. If market is overzealous, then it can reach until that high of that fair value gap, but it should not go outside of this fair value gap, not even by 1 tick. Not even by 1 tick. What should be your target? That sell side liquidity. Okay, this sell side liquidity, that should be your target. 1:2.79. Is that bad? I don't think so. This is how you can precise your entry. Very precise entry. Now, maybe you missed that entry. You didn't know this thing, this highly precise price action. You didn't know that. Okay, no problem. Now from 30-second chart, here is your concept. See this high and that high, they are relatively equal highs. Let me mark it from this relatively equal highs that has taken over there. So this is liquidity taken. After taking this liquidity, what do you see? You have now the obvious liquidity here. So that should be your target, right? This obvious liquidity, not the 15-minute extreme liquidity. Instead of that, you will go for 1 minute liquidity. After taking this buy side liquidity, market went lower. This swing low, is that valid for shifting market structure? Brother, this swing low has traded this fair value gap, so it is valid for shifting market structure. Now here is the part. What is your wick? Do you see any wick over there, or do you see just a body? No brother, there is a wick. Look, there is a wick. See, there is a wick. Now if I just make it like this, can you see the wick over here? Is it really visible? I don't think so. This is just a body. If this is a body, I don't count it as swing low. I'm not gonna mark it as my market structure shift. At the same time, when market, I mean, do you understand or not that part? I don't know. If you would love to mark a swing low, I am saying this because one of my brothers just marked it and asked me, market was over here. Okay, don't think I knew that beforehand. He just asked me, brother, now I got the market structure shift. I told him, no brother, that is not market structure shift. Don't believe that. Okay, if you are watching this one, who asked me this, please comment it to the comment box so that viewers can understand that I'm not telling hindsight. Okay, and I just told that beforehand. I told him, no brother, this is not market structure shift. The reason is there is no wick. Except wick, there is just a body. So if I see the body, I don't mark that as a swing low. So this is not my swing low, which is valid for shifting market structure. Then what happened? Market went higher again, one more time. Take that relatively equal highs, this high and that high, they are relatively equal highs. Market has taken another liquidity. Okay, so after taking this liquidity, then market has given me the market structure shift. This swing low is valid for shifting market structure. Here This is my market structure shift over there. After shifting the market structure, do I have any fair value gap over here? I have the fair value gap around that area. This is my fair value gap. But brother, market didn't trade that fair value gap. Yeah, I can see. In this type of situation, I actually don't wait to trade the fair value gap. Sometimes you will see after the market structure shift, I am already in the market, and if market reach one more time to the fair value gap, I added one more. How do I do that? When the real setup happened before, then market went higher and made another setup. In this type of situation, 90% of the time market won't give you the opportunity to trade that fair value gap or to take entry from that fair value gap. Trust me, brother. If you don't believe me, just do your homework. Okay, if you do your homework, trust me, you will understand everything. Just do your homework. So here, that was the part. I mean, if you just see how market clearly or perfectly trade around that area and just missed that for few ticks, then went lower, came until that area, until this sell side liquidity. Now here is the part of that same thing I showed you here around that area. Okay, this fair value gap, that fair value gap. Remember, I'm gonna see the same thing. Market went lower, take that relatively equal lows. All of these lows has taken by that one. So I'm going to mark this fair value gap. I would love to show you a lot of things, guys. Okay, just trust me. And another fair value gap. Which fair value gap, brother? Which fair value gap? Just guess it. Okay, pause the video and guess which fair value gap I'm going to mark. If you are right, you got something from here. If you are not right, then you will learn it from here. Okay, so please pause the video and mark it by yourself first. And I'm going to mark it. Okay, if you didn't pause it, you just missed the opportunity to learn a very nice price action. A very, very, very nice price action. Is that same thing, or I have changed my word? Did I change my word? Where should be your entry? When it will tap to this fair value gap? Where should be your stop loss? Just one tick above that fair value gap. Just one tick above that fair value gap. Why this setup is still valid? Because this 15-minute sell side liquidity is not taken yet. It's not taken yet. You have this 1-minute sell side liquidity as well. Where should be your target? This 1-minute sell side liquidity. No, brother, I would love to take that. I mean, hold my trade until that area. You have to take partial around that area. You have to take partial above around that area, and the rest you just let it go until that 15-minute extreme liquidity. What is the risk to reward ratio, brother? 1:12. No, I don't want to hold my trade until that area. Instead of that, I would love to close my trade around that area. What is the risk to reward ratio, brother? 1:6. But this is not logical. I can't put my stop loss over there. I just can't do that. What do I say? What should I say, brother? I showed you same thing here, right? Same thing here. Here from 1-minute chart. Remember, at the first I showed you this thing, 1-minute chart. Now, if you want to understand this part, you have to watch my last video, which is called ICT. I will put the link to the end screen so that you can get that video. Now, guys, if you have watched until then, I guess that you will learn a lot from this precise price action or precision of the market. If you didn't get anything, or if you have any doubt, ask me the question. If you don't ask me the question, I will never know that where is your confusion. So please ask me the question. If you are new to my channel, you are welcome to subscribe, because if you subscribe, you won't miss a lot of things which you are not going to get from anywhere else except T2 SMC Trader. Okay. At the same time, don't forget to give me the thumbs up. Yeah, that's all for this video. I don't want to go to 15-second chart. I thought that I will talk about the 15-second chart as well. I had a lot to show you from that time frame as well, but as the market, I mean, the video is going, has already a very long video. I don't want to make it more longer. So until here, okay, let it go. From, yeah, until the next time. Cheers, guys.